If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial, the podcast where we talk about business and technology. In today's episode, we're going to be comparing NIO's potential to NVIDIA's meteoric success in the technology industry. We're going to be talking about NIO from a fundamental perspective and talking about where NVIDIA was and where they are today. So this is going to be a super interesting episode. If you're new to the channel, make sure you hit that subscribe button. We're trying to get to 10K subscribers before the year is over. Make sure you hit the like button. Make sure you click the notification bell icon and leave a comment down below. Your engagement really does go a long way in helping out the channel, helping us to reach a broader audience. And without further ado, let's get into today's installment. So on June 6th, NVIDIA achieved a significant milestone, surpassing Apple to become the second most valuable company that's publicly traded on the US stock exchange. With a market cap that exceeds $3 trillion, NVIDIA is only trailing behind Microsoft. The man behind NVIDIA's success, CEO Jensen Huang, is now ranking amongst the world's top 15 billionaires, the net worth surpassing $100 billion. NVIDIA's rise is nothing short of phenomenal, driven by the global boom in the artificial intelligence sector. So NVIDIA's journey has been a testament to its strategic foresight and relentless innovation. Under Jensen's leadership, the company has risen to astronomical heights from a market cap perspective, going from 1 trillion to 2 trillion and reaching 3 trillion in less than 4 months. This pace is unprecedented in the history of market capitalization growth. NVIDIA's annual revenue soared by 123%, bringing it around 60.92 billion, with net profit soaring an extraordinary 581%. The first quarter of 2024 alone, we saw NVIDIA generating $26 billion in revenue, marking a 262% year-over-year increase. This robust financial performance underscores the company's dominance in the AI chip industry. Jensen Huang's leadership has obviously been pivotal to NVIDIA's success over the years. Despite facing near bankruptcy and fierce competition from tech giants like Microsoft and a longtime player, Intel, his unwavering belief in innovation and agility was able to take NVIDIA to where it is today. His strategic bet on future technologies and resilience have clearly paid off, reinforcing his philosophy that adaptability and relentless innovation are the keys to triumph in the tech industry. NVIDIA's leadership in the AI and GPU markets have been a significant factor in its market value increase. Demand for computing power in gaming, data centers, AI-driven applications, and autonomous vehicles have propelled NVIDIA to the forefront. The story once again underscores the importance of strategic foresight. Now let's shift our focus to NIO, who many dub as the Tesla of China. It's a narrative I don't agree with. They're making strides that could present the same type of growth that NVIDIA has seen over the year. But let's be clear, NIO has a very steep hill to climb. Comparing its ambitions today to NVIDIA's is almost like reaching for the stars. The skepticism is totally warranted, especially given NIO's lackluster performance over the last couple of years. However, the potential for drastic market success is a potential that I personally believe, just my opinion, that investors should not rule out. NIO's approach is wildly different from Tesla's with its own unique market strategy. NIO's power unit is a comprehensive energy and service network that supports its EVs and others' EVs as well. With an extensive network of battery swapping stations, superchargers, and mobile charging solutions, NIO addresses the biggest pain point for EV users, which is range anxiety. Its innovative battery as a service approach, allowing users to rent the battery and own the car, makes entry more accessible to the masses and provides a recurring revenue stream similar to NVIDIA's recurring revenue streams from its software and AI services. Owning XPT Motors also allows NIO to control quality and cost of NIO's electric motors and powertrains, much like NVIDIA's control over its GPU production. NIO also has a significant stake in a battery asset management company, which is something that many don't even consider when it comes to NIO as well. The battery management systems market is projected to be $11.79 billion by 2029 compared to what it is today, $9.7 billion. It's obviously driven by the increased adoption of electric vehicles and the need for robust charging infrastructure. NIO's Onvo brand, formerly codenamed Alps, aims to make NIO's technology accessible to a broader market, the mass market, with competitively priced models like its first model, the Onvo L6, set to hit the streets in September, which is going to undercut the Tesla Model Y, Tesla's biggest seller in China, by around 30K. The upcoming Firefly brand will also further expand NIO's customer base, enhancing their market penetration. Then we've got to talk about NIO's strategic partnerships and ecosystem expansion. There's increased adoption of NIO's technology by its partners. It seems like every week we're getting an announcement about a new deal with NIO and other electric vehicle companies. Similar to how NVIDIA has this ecosystem of obviously their AI chips with their data center manufacturers, hardware manufacturers. The NIO phone is a completely new concept, but it offers seamless integration with NIO's vehicles, making a more interconnected experience for their users, further enhancing the ecosystem and building brand loyalty, much like Apple's ecosystem. NIO Capital is owned by NIO. They're making strategic investments into technology companies ranging from autonomous driving to energy startups, providing some more diversification for NIO. So as you can see, the theme here is that there's many arms to the business that is NIO, and it's kind of echoing the adaptability thing that we talked about earlier with NVIDIA. Something that's very huge and very crucial is that NIO has strong government support. The Chinese government is investing a lot into NIO. They're helping them build battery swapping stations. They're giving them subsidies and incentives, which clearly enhances NIO's competitive position, not only from China, but also from a global perspective, because these are things that allows NIO to continue going, continue operating, continue growing, and making them more competitive worldwide. So the support is crucial for NIO's long-term success. Back to the battery management system market, which is expected to grow significantly. Just harping back on this again, it definitely plays a crucial role for NIO's future growth. The transportation segment, particularly EVs, is expected to dominate this market, with Asia Pacific, especially China, leading the charge. China's significant production capacity and government support policies are creating a conducive environment for growth. So NIO's comprehensive and integrative strategy could position it for future success, similar to the run that NVIDIA has had. By leveraging innovation, strategic partnerships, and a robust ecosystem, NIO could potentially achieve a level of significant market dominance in the EV sector. However, it's important to now acknowledge that NIO has a challenging long road ahead of it, a steep hill to climb, and the skepticism from investors today is certainly justified, especially after coming off of that Q1 earnings report, which wasn't so special. But the potential for substantial market returns and success remains a feasible possibility. That's all for today's episode of the Courtside Financial Podcast. I hope you got some value out of this. Make sure you hit the like button, make sure you hit the subscribe button, click the notification bell icon, leave a comment down below. If you found this video informative, helpful, useful, at the very least entertaining, make sure to give it a thumbs up as well, and we'll see you in the next installment. Thank you for watching.